Hi, my name is Nikita Brashatsky, and today we'll be going over my firm valuation for TSMC, also better known as a Taiwan Semiconductor Manufacturing Company. So for some background on TSMC, they're headquartered in Hsinchu, Taiwan, and they operate multiple fabrication plants around the world in Taiwan, the US, Japan, China, as well as some places in Europe. They were founded in 1987, and they're the world's first and largest dedicated semiconductor pure play foundry. But what is a pure play foundry? Pure play foundry is so instead of designing their own chips, TSMC only manufactures chips designed by other companies. This offers them a distinct business advantage for TSMC because they can utilize economies of scale and hone in on the production capabilities. Through this, they've been able to capture over a 50% market share in the foundry industry, as well as over 90% in the super advanced semiconductor chips category. Technology companies like Apple, AMD, Nvidia, and Qualcomm all rely on their fabrication abilities for their vital parts, and they're a pioneer of advanced process nodes. As you can look in the chart on the bottom right here, you can see those semiconductor chips getting smaller and smaller. All of those are thanks to TSMC. Now for an overview of the semiconductor industry. So the semiconductor industry is expected to grow by around 13.1% in 2024, mainly driven by automotive, AI, and cloud computing as revenue drivers, especially with automated driving. Companies are diversifying supply chains to reduce geopolitical risks, especially when thinking about issues with Taiwan and China. Governments are introducing policies to support domestic manufacturing given the high demand, with the new manufacturing facility being opened up in Arizona, sponsored by TSMC, with Joe Biden even coming there for the grand opening. Right now, 55% of semiconductor companies plan to increase capital expenditures in 2024 despite these economic uncertainties. And Bank of America projects that the semiconductor bull run will persist until around mid-2026. And just for a quick overview of how the industry works, here in the bottom right, we see a few different companies in different categories. What you want to focus on is foundries, fabless chip firms, and fabless non-chip firms, that being the Apple, Microsoft, Tesla. Those guys, they just buy the chips from the fabless chip firms, which don't even make them themselves. They have TSMC make it for them. And when comparing TSMC to the competition, we can see that in terms of market capitalization, it is the second most valuable company on this list here, with Nvidia leading the top. Some notable ratios are the enterprise value divided by EBITDA. It's considerably lower than the average, standing at 13.7, as well as having a relatively standard of the pack equity beta and asset beta. There's nothing else of significant note in relation to this competition here that really stands out. Now for key assumptions, one of the most important ones is certainly sales growth. And now the reason I have this graph here is to demonstrate the cyclical nature of sales within the semiconductor industry. As we heard earlier from the Bank of America analyst, it's going to be probably a bull run until around mid-2026. So that's why I'm accounting for here. 15, 20, then 25% growth at 26, then a sharp decline, and then a slight increase. Now onto some more key assumptions. I have capital expenditures projected from 23,000 up to 67,750 in millions, of course. And for the capital expenditures divided by sales, as a result, it goes from 28% all the way up to 48%. Why this stark increase in capital expenditures? I believe that it's in line with TSMC's promise that it's going to continue expanding capacity and advancing technology. The higher capex sales ratio indicates that TSMC is heavily reinvesting in its revenue and expanding and upgrading its production capabilities, which is critical for maintaining its technological leadership and meeting increasing market demand. I kept the EBITDA margin as a result around the same, as I assume that they would be able to capture and maintain market dominance even better than they previously did, given the shift. For my deep dive, my first one, I chose current assets other. As you can see for the 20F and the WRDS, the values didn't perfectly align, but to cut myself some slack due to the currency fluctuations, I did do two anti-significant digits just to make sure I still had some kind of verification. Forecasting the values into the future, we can see from 2019 of a value of 544. In 2028, we get a value of 3874, a rather significant line item. Looking at the growth rate of other financial assets and other current assets, we see 16.52 and 18.13% respectively. Now, other financial assets, that's things like marketable securities, derivatives, and other investments. And the reason it can be useful to track things like current assets other is because it can tell us things such as their operational efficiencies, as well as indicating short-term financial health. Now for my second deep dive, I did other current liabilities. So hedging financial liabilities, those are financial instruments used to manage exposure to various risks, such as currency exchange rates and interest rates. And these are typically derivatives like futures, options, or swaps, salaries and bonus payable, amounts owed to employees for salaries and bonuses that have been earned but not yet paid, accrued profit sharing bonus to employees and directors. Those are bonuses based on company performance that are accrued but not yet paid to employees and directors. Accrued expenses and other current liabilities. Those are expenses that have been incurred but not yet paid, including utilities, rent, and other operating costs. This also includes any other current liabilities not separately categorized. And finally, cash dividends payable, dividends that have been declared by TSMC but not yet paid to the shareholders. Of note here is accrued expenses and other current liabilities. It is the largest line item starting after 2021 and is growing at a more rapid rate than all of them. Looking at the average growth rate in the center right, we can see that the accrued expenses and other current liabilities has a growth rate of 18.32. Projecting all of this into the future, we can see that other current liabilities ends up at 32,864 million in millions, compared to the starting in 2019 of 7,558. And just as a breakdown of how each of these items fall into other current liabilities, I presented this chart on the left here with the top line representing other current liabilities total. Now for my sensitivity analysis for TSMC, I chose to do net debt. And I did 4 variations from negative 25%, negative 10%, 10%, and 25% changes from the original net debt amount. As we can see in the chart on the bottom left, with changes in net debt, the WACC barely changed at all, not even changing a full 0.01%. However, when we do look over at the sales revenue and enterprise value, we can see that they changed significantly, as demonstrated in the bar graph in the bottom right. And for the RA derivation, what I did was I found the asset beta of the Taiwan Semiconductor Manufacturing Company, and I applied it into my formula in the bottom chart there, yielding me an RA of 11.75%. Now, for the growing perpetuity valuation, I did manage to get a metric that was fairly close to the actual estimate. Using the RWAC calculated earlier and assuming a G of 2%, I found an enterprise value of 482,553 and 480,800 from Yahoo. So this indicates that TSMC is fairly valued with an EV of approximately 480 to 553 million, close to the current market valuation. And for the EBITDA multiple valuation, I would like to first refer to the chart on the right-hand side to show off that the enterprise value divided by EBITDA of TSMC is 13.7, compared to the industry average enterprise value divided by EBITDA of 32.11. Now, if you notice, those are around a factor of 3 different, a little bit less. When we look over at the enterprise value that I calculated, it's 1,573,838 million compared to the current market enterprise value of 480,800 million. Now, this does suggest a significant potential undervaluation of TSMC. And for the implicit growth rate, as I have centered in the left-hand side right above enterprise value calculated, I found that using the RWAC, the terminal value, and the last projected discounted cash flow. And in conclusion, TSMC's commitment to innovation, their continued market share dominance, investments into research and development, and production capacity expansion position them well for long-term success within the semiconductor industry. The semiconductor industry as well is poised for robust growth, driven recently by demand in AI, automotive, and high-performance computing sectors. Some risks to bear in mind, though, if considering to invest, are geopolitical tensions with China and Taiwan, as well as supply chain disruptions. Thank you for watching.